rallies. Let's talk about a corporate as well, which we've lined up for you. Astra Microwave Products reported a good set of numbers. The company, the revenue in the margins, which was reflected by the change that the company saw in it, 14%, whereas there was a decline in the. So to discuss this and strategy at Astra Microwave joining us. Thanks a lot, Atim, for joining in. You've given us guidance for the next in terms of revenue while maintaining profit margins. So this one, what will your revenue be comprised of going forward? Because at 21% that you did, 24%.
Good afternoon, and I want to start off by, thanking our mentors and partners, which is the Defense Labs, DRDO, Defense PSUs, and ISRO, without whom we would not have been where we are today. And our growth is linked to their growth. Actually, it's more our growth being linked to their growth. But when we speak of margins, the margins are effectively in line with our guidance, which is our PBT margins should be in excess of around 17%. The product mix defines our margins, and this is a multi-decadal opportunity, if I may say, with us being in a infancy state, laying the foundations for a growth. We cannot be looked at on a quarter-to-quarter margins, if I may say. So our margins will be determined more by our product mix. As you said, space, if it performs well, we get a higher margin contribution from there. If we have products which are being churned out, which have a higher component of products which are manufactured in-house, that leads to a better margin profile for us. So we are hoping and we are quite confident that we will be able to maintain the current margin profile which we have come out with.
Okay. All right. Mr. Kabra, space is around 14% of your revenue as of Q4. It's jumped significantly if you compare it to, say, Q3, where it was around 6%. What is the order book looking like for you in FY25, and how much do you think it can probably increase as a percentage of revenue?
See, if I talk about the overall order book, we are looking at a consolidated order book of about close to 2,300 crores, actually 2,299 crores as of 31st of March 2024. And the standalone order book for us was 1,956 crores, which because of a few orders which were booked in the first month itself, we have crossed 2,000 crores of order book. Space has been, I would say, we had a breakdown in a critical machine last year, as a result of which you saw the overall space revenue declining. However, the machines are back functioning, and therefore we are looking at executing on the significant order book which we have from the space business, space grade components and subsystems.
Right. That still doesn't answer our question of where you would like space to be going forward. But, we'll ask you that. In the meanwhile, I just wanted to know about your promoter holding. It's constantly been coming down from June 2021, which was a little under 9%, to September 2022, which was about 8.5%, and now it's 6.5%. You cited this to be a multi-decadal opportunity, a growth opportunity, with a promoter holding as low as 6.5%. How do you manage to, participate in that in a formidable manner?
The company was started by 3 scientists from the Defense Labs. Of these 3, 2 folks have moved, 2 people have moved out. And the only gentleman who's classified as a promoter is Mr. Chitrakar, who has the promoter holding, which you mentioned. However, If you include my holding along with the PAC being represented by Mr. Suresh Somani and Mr. Chitrakar, the three of us who are on the board alone represent more than 21% of the company as equity. So it is actually not the correct way to look at only the promoter holding classified as promoter holding. This company is being run by the board, and on the board, we represent more than 21% of the shareholders are represented.
So why wouldn't you all classify yourself as promoters as well then?
I wish I had that kind of money that I can make an open offer and get myself included as a promoter. We did debate it multiple times over, but frankly, the kind of money outlay which is required for this, we don't have that kind of money.
Okay, just want to come back to that space percentage of revenue. 14% goes to what in FY25?
I am very hesitant, and I am very hesitant to put a number out there because the final delivery of the space components is not only in our hands, but also the tests, etc., which need to be done and the qualifications which need to be obtained. I can just tell you that.
What is the aspiration?
We would maintain somewhere around the current numbers.
Okay, all right. You also have a collaboration with a company, Teledyne E2V Hyril, and
yes.
Excuse me if I haven't pronounced that correctly. It is to provide semiconductor services support. Tell us
Yes.
the potential from that, considering the semiconductor industry dynamics currently.
We have zeroed in as a part of our expansion strategy on a collaborative platform model where we would be interacting and collaborating with a lot of folks out there. Teledyne is one, as you are well aware, is one of the big majors in the space of semiconductor chips. And what we are looking at with them is, again, a significant long-term growth opportunity, wherein MMIC chips, which are one of our core foundations around which our product capabilities have been built, are being marketed globally with their assistance. We also are looking at these further development of chips for the global markets happening with inputs coming in from Teledyne, with Teledyne being being the marketing arm. We are looking at scaling up our MMIC business multifolds. I cannot put a time frame onto this, but this is again going to be a long-term opportunity. As I said, we are laying the foundations for a multi-year, multi-decadal opportunity, which is gargantuan in our opinion.
All right, and final question then. Exports, close to about 30% of your FY24 sales. You cited a 1,000 crore opportunity by FY28. What's the glide path towards that? What do we see exports in FY25, FY26 and FY27 as per you?
Exports will be decreasing dramatically as our domestic business picks up. As you're very well aware, the margins on these exports, which are basically built to print, they are very less. And domestic business should increase substantially. We are defocusing exports and focusing on higher margin businesses. So in our overall scheme of things, what we have mentioned is that we expect our exports to be about less than between 10 to 15% of our business going forward over the time frame which you mentioned.
Okay. All right. So we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Astra Micro. That stock is down around 0.5% at this point in time. Well, they are bullish going into FY25. So let's see if all of that guidance comes through or not. For the mid-cap index, there's been a little worsening which has taken place in terms of the index itself. So do watch out for that. Now down almost 400 odd points at the low point of the day for the mid-cap index.